Good afternoon and welcome to the FX Daily Roundup. And it's been a relatively quiet day, although we have seen the cable going to make a slide down here, actually coming down here into the 38%. Got some additional support coming in right here, 29. Actually had our bias chart support here at 29.53. I wasn't sure if we'd break too much lower, but we did. We went and actually came down to the 38%. And obviously we finish here sets up one heck of a reversal because we know we've talked about the importance of 29.80. And so we've basically given up everything in such a short amount of time. And really all other rallies are going to be faded from this point on. How much we pull back? Well, we do have some support coming here at 28.53, and I do like that for a decent little bounce. But potentially we could come down here to 27.96. We shall see, but potentially to 27.96 before seeing what I would believe a more sustained bounce. Euro kind of bouncing back, but nobody believes the euro anymore. We've heard talk about it's going to bounce, it's going to bounce, it's going to bounce. Like I said, unless the dollar starts to slide back, anything can happen at the year end. But once again, like I said, the year, probably just a little bit of evening up of positions. I think people have been fooled so many times by this pair. I don't think anybody's willing to go and buy into that. Well, like I said, maybe we'll go and see a little bit of a bounce, but I think you'll see willing sellers come in and step in here. The only thing is that when we did break here, potentially we could go on and come down to 10.20. So they're trying to hold on, but I don't think you can make too much of any moves here until we get into the new year. Did see the dollar CAD bump around here, but same thing here with the dollar CAD. I think with the dollar CAD, one of the things we looked at in the European crossover, go and take a quick look at that. This pair has just been up and down, up and down, up and down, up and down, but within about a 250 pip range. But look, you get a big down move, then you work up and get a move up, quick down move, struggle to get back up, then another quick down move, then you struggle to get back up, then you get a slide back down. Really, the key levels are really going to be 30.43. I don't think anything's going to get resolved until the new year. 30.43 and 33 even. Although right now for today's buy chart resistance, we're looking at 32.05 and 31 even, and we're just stuck within that range. No real big changes. Dollar yen, we'll go and move into that quickly. And we're just stuck here just above this pivot. There was some selling that was noted coming into the start of the week. A little bit of a reference or concern as to what might happen, what happened the last year. I don't see a comparison whatsoever. Completely different situation. You're thinking, okay, well, they said they were afraid that we might see a big drop, the flash crash low that we saw last January. It's not even the same technical picture. Here we are. Here's a flash crash in January, okay? And where were we leading up to that? So we're going to look here. There's December the 19th right there, okay? So we've been, trading in this area here between 12.92 and almost 14. And come December 19th, we go on and here we are, December 19th. We go and do a quick slide here. Not too much. I mean, not a minimal slide. We slide from about 12.50 down here to 10.85. You know what I mean? Closed up at 11.36. We hold there for one day and then we drop again. We drop down to 10.39 or 10.30 and we rally up to 11.36. So we actually seen some volatility come in place. And then as we come into the day after Christmas, you see this market coming down and dropping and dropping and dropping. And then finally flash crash, we get the big. We haven't done any of that. This market has been like, you might as well be sitting in a graveyard. There's no activity whatsoever. Also, S&P's been higher. Maybe we get a pullback, but it is not the same thing whatsoever. So I'm not sure what the big hullabaloo was. Obviously, the market caught itself or rethought about things, and after dropping maybe 18 pips, rethought about it and said, well, this is probably pretty silly because the technical picture is nowhere near the same that it was leading into the flash crash. None whatsoever. Now, if we drop, let's say, and as I mentioned, the drop actually began on December the 19th of the previous year, and that's after we'd been trading in a fairly wide range here of essentially about 175 pips back and forth. Well, if you look here, we've been trading in a range of maybe, if you were to take all that encompass, maybe 100 pips maybe, whereas this here we were closer. Actually, think about this. Here's 114, and here's 1218. So essentially 200 pips. So less than half that. But the thing is before the holidays, we actually started breaking down pretty decent amount. Breaking down a decent little clip to this point that where the market was 1250, and we fell as low as 1083 before recovering a little bit to 1136. The range has now been like 30 pips or something like that. It's nowhere near the same thing whatsoever. Take a look at the dollar peso. We're still stuck near the lows. No big changes. I'm not expecting any real big changes whatsoever until we're probably well into the year. There's nothing to suggest that. Maybe eventually the euro turns around, but there's going to be more than enough people to sell this thing. Although data coming out of Germany has been better overall, the market still continues to go on and have a tough time, trying to get higher, and the dollar's still hanging on. Really, it's not about the euro, although the euro comprises 56% of the dollar index. It's going to be really all the dollar. It's going to be whether the dollar decides to go on and pare back. Has nothing to do whatsoever with the euro, which has not been able to do absolutely anything whatsoever. Taking a quick look at the cross rates. And we have seen some decent little movement here in the sterling pairs. You can see here that the guppies come almost all the way down to 141, and same here with the sterling versus the odd. Pretty good little pullback. We actually potentially have a move down here to 86.17. So didn't expect it at first to start right from the get-go pressing that lower, but essentially we've just given up most of all those gains for the most part here. So we'll see how that in a sense plays itself out, but not expecting any big moves whatsoever until we get into the new year. Anything's possible. We can take a quick run here. It's relatively quiet session overall, with the exception of the sterling pairs. But let's see here. SPOOs continue to remain here and have set new all-time highs again. NASDAQ, same here. A little bouncing around here in the 10-year note, and gold still managing to hold up fairly well. You can see on the 30-minute, we got a nice little, on a pullback, got a nice little hammer, and we're still pressing a little bit higher. Even after you got a little bit of this gravestone doji pair back, gold is still holding up remarkably well. So if we ever do get that pullback in SPOOs, we could really see a pretty good reaction in gold. That's about it. There's nothing else here. It's very, very quiet. But today's going to be the last day of the week for the FX Daily Roundup, and we won't have any more. There won't be any webinars that we expect to have for ForexAnalytix unless something does pop up. We get big move or something. We could always jump in. But that being said, this can be it for the week. So happy holidays, Merry Christmas to those who do celebrate Christmas, and we will see y'all next week.